Good day, traders. Stacey Burke from Stacey Burke Trading. Continuing our discussion from the first part, asking yourself one simple question before you start trading each session, and that is, am I near or at the high or low of the day? So basically, am I buying low or am I selling high? And we're going to go back through. You can see I've got my screen up. I have 6 pairs up. These are the 6 pairs that I follow. I don't look at anything else. I know there's other days that some markets move great, and that's fantastic, but you know, they all move, and that's why I follow 6. What I'm looking for is 1 or 2 that match my criteria for a best possible setup as we head into each 12 candle window for London or New York if I stay up for New York. So, you know, if we just pick 1 pair, we'll go back through the week. And I want you to just get some real simple concepts to stick in your head. We talked about the 12 candle window. And I mentioned that in a large majority of the time, the first hour is a trap. And that's really important because now that narrows down things to 8 candles. And the rare time that the first hour is the trade is often either after a third push or in a market that's already in a breakout from the Asian session. So 2 things to consider. Is this the third push on an extended move for a move down or a move up into numbers? Or is the Asian market already breaking out of a trade consolidation from either a move off the low of the week or the high of the week, and we are coming along at the Europe Open midway through that move, and that sometimes could still be a 1, 2, 3 pullback against the breakout for a continuation at the London Open, or it could be a move off of numbers to start the move, and London becomes the second leg where it starts to move. Just have a think about that. Go through your charts. We'll look at some examples of this week's trades, and we've got the pound Canadian. So Monday, and again, the previous session, we were inside of the U.S. sessions range. The market went up in Asia, went sideways, dropped down below the numbers, extended that low of the day out in that next 3-hour window, came back, and in our first, well, just going back to Asia, our first 4 candles didn't really go anywhere. They stayed above the numbers, and then bang, at the Asian Open, they 1 bar up, 1 bar back, 3-bar engulfment with a pin on top, sideways. The market breaks below the 00. So traders are short in the market with a stop above the high of the day. They go sideways. In the next 3-hour window, it drops down. 1 push down, 2 pushes down into the open of the Europe session. 1, 2 down, 1, 2, 3 up to the high. Stop hunting traders who have gone to break even. Sideways at the London Open at round numbers, inside bar. 1, 2, 3 is the false move. London breaks down, continues the original trade direction. So again, 1, 2, 3 false move up to the stop hunt high of the Asian shorts. Inside bar at the London Open, 3 a.m. New York Eastern Standard Time. Now I know London might open at 3:30, whatever. That hour though, that second hour, is the open of the London session for me. Now, again, the market broke down, 1 push, 2 push, pulled back. We've got traders in long. 1, 2, 3 down, sideways, continues the move. And again, remember, we said we were inside of the U.S. session. U.S. session has stop losses below. That's the real low of the day currently. Okay, so we're inside of that high and low. That's what you got to be thinking. They dropped it down, they pull it back to numbers at the London Open. They moved it up to sell it high. We go down. They drop it another 50 pips. We go into our 12 candle window. Sideways pin hammer above the numbers. Big candle down. Little bar at the bottom. They break back above the numbers. The market opens up inside of the high and the low. The market opens up inside of the high and the low that's just been painted at the U.S. pre-market. Okay? We don't trade on the inside. The only place you can trade is if they go back down to the extreme or up top to this extreme for a sell high scenario back down with the original move, or a buy low scenario near or at the low of the day. They come back, pin hammer, shorting into the move off the bottom. They fill the gap. They go sideways. Then they give a pin hammer to go long. Now traders, that's outside of our window, but even if traders had gone long here, we had 1 push, 2 push, 3 pushes, you would have to be at break even at a minimum if you were holding on for more, or out of the market as we get to the end of the session. As you can see why. The next day, okay, we go sideways. In Asia, they hit the stops on people who shorted it at the close. So again, each day, assume that you're in one of these trades from the close of the session, off the low or off the high, wherever. But they hit the stops in Asia. 1, 2, 3, hit the stops, pull it back. 1 push, 2 push, they go sideways inside, hit the stops again. Get the traders who are long in the US session on that second leg. So again, they hit the stops, then they go back up, and they get the guy who shorted it at the beginning of the session. Okay, so 1, 2, 3, 4, 5 down, they hit the stops. London opens up down low. Breakout pullback. Traders short this thinking it's going to continue going down. They're selling low. Remember, we talked about when the market opens, are you selling high or buying low? We make money by buying low and selling high. If you sold low here, okay, if you bought here, there's no reason to be buying this. You have no buy signal whatsoever. That's a breakout and a pullback. That's all that is. That is not a buy signal. That's the first mouse. The follow through, people are selling low. Consolidation, they stop hunt traders who are short. They hit the high again. Okay, no trade. Consolidate, pin hammer. Now traders, if you went long at the end of this 12 candle window thinking it's a second leg for a move back through the highs of the day, and you take this trade, 1 push sideways, 2 pushes sideways, okay, they come back and stop hunt traders who are long here. Okay, so you haven't been stopped out down here, but as soon as they reverse this market, you'd either be closing this out. Actually, after they pinned it, you'd want to be at break even. But my point is that you had plenty of time to get out of this trade, because this trade should have followed through immediately. So don't wait for that to come down and stop you out with a huge loss or a bigger loss. Get out. As soon as that market came back, it was wrong. Get out of the trade, lose 7 or 8 pips, close it out. We go into the next session. So again, Asia is inside of a 50 pip box. They tried to go lower to the previous low of the day's low. And again, if you look back, we're still inside of that US session low prior to the market open. 1, 2, 3 down, they hit the stops. Okay, 1, 2, 3, 4 back up at the open of the US session. And where are we again? We're on the inside. We're inside. Okay, we cannot trade on the inside of the high and the low. So if you're following pairs like this and you're sitting there trying to short a market or go long or something, you might get it right. But look at, you're inside. We work from the extremes. Okay, so you're done. Now again, there's 6 pairs. This is why we look at 6 pairs, because we're not trying to trade every single move in here. You know, you might have hung around and shorted it later. I don't know. Maybe you went long at the end. You stayed up all night. Or if you're in North America, you traded it into the close, which is fine. What I'm suggesting to you is we're not trying to catch these moves. We're looking for opportunities where the market locks in a position at the low or the high. Now, this would be a low quality day for this pair. There's no trade setups there. And again, I said pay attention from as the new day starts. Pay attention if you were in this trade off the bottom. So the next day comes, you say, okay, somebody's long off the bottom here. A double pin, hammer, reversal. They're up pips. 1 push, 2 push, 3 pushes to the high. 1, 2, 3 in the pre-market open. That's what you want to see. This pattern. 1, 2, 3 to the numbers. Hitting stops of traders who were short, not necessarily having to take out the high, because maybe they've done enough work, they've cleaned out the money, but they go 1, 2, 3 to the high, bear reversal, hammer at the double zeros at the market open. Next candle, market opens, drops down again, sideways, drops down, keeps dropping all through extended 3-hour window. 1, 2, 3 down again in the Europe Open. 1, 2, 3. This pattern, 1, 2, 3. 1, 2, 3. They triggered the previous day's low. Breakout traders are in the market now. And today, maybe 4-hour market traders, 1-hour traders, they're in. They've just been, a breakout trade has just occurred. But again, 1, 2, 3 in the pre-market. 1, 2, 3. And then sideways inside bar, 1, 2, 3, London Open. Okay, we got a breakout and a pullback. But again, our 12 candle window, 1, 2, 3, 4, first hour, trap or trade. Okay, we're at double zeros. They went 1, 2, 3 up, hit stops. That's a trade right at the open of the market, selling at round numbers. Okay, we got to move down. They hit the previous day's low. They pull it back. Sideways at numbers at the market open. 1, 2, 3, sideways with the trend, 50 pips. Boom. Okay, you're done. Some traders hung around. They wanted to trade it back long. The market opens up in the U.S. session. Okay, they took out London's highs. They got the London shorts who didn't take any money off the table, but we're inside of the high and the low of the day. Okay, so if you went long off the bottom, that's fantastic. You got a second leg double bottom, perfect. But if we stuck just to our 12 candle window, okay, first hour again, 1, 2, 3, sideways, 1, 2, 3 at the open, up high, for a stop hunt back into the range. But again, the U.S. market session was inside of the high and low. That's not an ideal setup for me. It's tradable, but it's... Now again, I'm just going to demonstrate something here. We talk about measured moves. People have asked me, what's your measuring tool? I'm going to keep saying this over and over again. I just changed my Fibonacci tool to 100% expansions. It is not Fibonacci. I don't use Fibonacci. I mean, you don't even need this. You can look at this and say, this is 250 pip boxes. That's 100 pips. So I add 200 pips to the bottom of this box. 100, 200. Now, would I use that as a complete target? Not necessarily. In the U.S. session, if I was still up for this trade, I would have either already taken some off or I would have followed that down through the session. Now, I know that it would eventually possibly hit that 200 pips, but what I'm more concerned about is looking at the measurement to see where this should go. Now, a 300 pip move can happen, but typically it doesn't. So I would also take the measurement of this range and consider that a more valid distance. So I combine the two. I look at this, and my 2 times the box takes this to approximately 172.50. Okay, so that's in the middle of that third box from my original measurement, which is what I would normally do. I would take a halfway point on that second box as a target in a very strongly moving market. So again, bigger geometry at least 1 times as a minimum, so there's 100 pips, but on a strongly moving market that comes out this fast, you know it's not stopping at those numbers, I would follow it down either right till it started to exhaust itself or take halfway on that measured move. So just to reiterate again, 1, 2, 3 down, 1 bar pullback, inside bar. The first hour, okay, is usually a trap or a setup. So they trap traders short, they hit their stops, they go sideways, they set it up for a sell high scenario back through the anchor point that the pre-market has set up. So even measuring that, we can do that now. 2 times that full expansion takes us down almost right to the low of the session at 72.30. Okay? So again, now if you were long off the bottom going into the next session, 1 push, 2 push, 3 pushes. Okay, 1 push, 2 push, 3 pushes. Remember I said about trap volume. Okay, so they drop it down. They go sideways. 1, 2, 3 in the beginning of Asia. 1, 2, 3 down again. Still haven't taken out stops of traders who are long off the bottom. Okay. Now, this is payrolls Friday. So again, prior to the session, I want you to understand you are inside of the high and the low. You're inside of the high and the low from the previous session. So they've brought one push, two push, three pushes, brought it up, pulled it back inside underneath of the double zeros. So they contained all of this price action inside of that 50 pip box. So traders are looking to trade these swings inside here, but you're inside of the high and the low. Now the question you want to ask yourself, and I said this in one of the other videos, is I will wait if I've not. I ideally look for a trade in London on payrolls, but I'm well aware that, you know, if I get 40 pip move and it's slowing down or anything else, I'll just close the trade at 40 because it's payrolls and chances are they're going to consolidate volume or do something to limit what traders do before they get into payrolls. Anyways, we go and you wait for payrolls. So payrolls happens right here. 15.15. Sorry, on the next candle. They hit the stops at the low of the day. We work from the low and the high of the day. Now, they haven't taken out the overall low, but they've hit all the stops at the low of the day where all the other breakouts have been filled. So you notice the breakout pullback, they hit the stops on break-even traders, they pull it away. They've hit the stops on the traders that were long in the London session. They hit the stops, they pull it back after payrolls. So we've had our first hour, then payrolls in that pre-market. The market opens, we go one down, little doji, bang, breakout candle. So if you weren't in down low for the long and you took this candle at the US Open, okay, where do you think they're going? To clear out all the stops up top. And when you're right on these trades, after they've trapped the volume, and which is why we work from the low and the high of the day, these trades move fast. Trades in here where they're creeping and everything else, you short it here and you're in the money, you're hoping it goes back down and then it goes back up and stops you out. When you buy at the low or sell at the high, these markets move. Now, this is not a trade that I took, but when we look at the pound New Zealand, okay, this was a perfect trade. Okay, the original trade, I'll just bring this back over. Okay, so same thing. They brought the market up. One push, two push, three pushes, sell it at round numbers, drop it down below the numbers. They work it. London Open, they hit the pull it back again for the continuation sell-off down. They pull it back up prior to the market opening. So you have a low of the day in place in a creeping trend down. One push, two pushes. And what do they do at the US Open in the pre-market? 1, 2, 3. Engulfment at the US Open, just at the round numbers. And where are they going? They're going back to get traders who were short. So you notice they've lowered each box. Asia is lower, then there's lower stops. They continue that move down, but they pulled it off of a low. And in the pre-market, they drop it down again and go 1, 2, 3 reversal at the numbers. These trades are lock and load. Sideways, boom, through the high, 50 pips plus. So hopefully you understand. This is a textbook trading setup. If you screenshot one trade setup, this is the one that you want to look at for the New York reversal. This is classic. But payrolls is an example of people try to trade that. Why bother? Just stick to the system. That was a perfect 1, 2, 3 and a reversal. Just at the end of that first hour in pre-market, they stay above the numbers. 2 little bars before it takes off, hits the traders who were short. Before the market opened, they shifted away and hit the stops of traders who were short in the London session. So again, go back through your charts. Look at each day in that 12 candle window. And again, one of those will end up being the high or the low. London's the high. The extended US session is the low. They're sideways inside of the high and low in Asia just prior to the BOE. Look what they did. There's the high. There's the low. They brought you in the middle. Traders are all jammed up inside here. They hit the stops up top. They come down and they hit them down below. So traders who were long, who didn't take anything off, this came right back to get them at break even or at their fill price. Then they gradually pinned it, possibly stopping out traders who held on to it. People who were short, who hoped it didn't go any further, held on to it. They kept pinning it and putting heat on them. Traders even, but you'll notice after the news, then they drop it down one more candle, the second candle London, then sideways, and there's a pin hammer after the announcement candle underneath of the big bull candle. A pin hammer. Just emphasize that. Again, you don't need to trade the news. After a big candle, there's always a little one. But again, our first hour, even in Asia, 1, 2, 3 down, reversal. They stayed inside of that high and low the rest of the session. Okay? We want to be buying low or selling high. So traders who traded Asia, the only place you can work from is one of the highs or lows. So they had 1 push, 2 push, 3 pushes, engulfment, sideways into the Europe changeover, pin hammer, 50 pips if they took it long off the news. After the news was the pin hammer candle. They brought it up high to sell it in London. 1, 2, 3, New York, same thing. 1, 2, 3 down, engulfment candle. The difference being from this situation to last night in payrolls is that this is a downtrend. They traded 1, 2, 3 and then engulfment into the numbers. This isn't a second-sided structure after a stop hunt. This is a continuation with a pullback and then a 1, 2, 3 sideways pin hammer at the numbers for the continuation back through the anchor point. So again, this is second side stop hunt, 1, 2, 3 stop hunt. This is a 1, 2, 3 extending the move. Pullback, sideways 1, 2 pin hammer, 1, 2, 3 stop hunting through the low, consolidation, and a measured move. So I hope that makes sense, traders. 1, 2, 3 in that pre-market. Look for second-sided reversals or extending the move and a pullback continuation for a measured move through the anchor point. Whether that's long, short, doesn't matter. We work from the high and the low of the day. So we're at the low of the day in a downtrend. We want to be sellers. Sellers up high in the U.S. session. This is selling the high of the U.S. session. This is buying the low, not only of the day, but the U.S. session. Okay? Stay disciplined, traders. Go back through your charts. Go through this. But you've just narrowed your trading session down to 12 candles. And in a large majority of the cases, to 8 candles. So think about that. It's all about the timings and the structure of the pattern of that trend that day. Have a great weekend. Stay disciplined. Stay focused. Hopefully you got some value out of this. If you're not sure what the price patterns look like, go back through your charts. There's the same setup again, New York reversal. Okay? 1 push, 2 push, 3 pushes. Traders go long here in the pre-market. This is the pre-market. Okay? There's the low of the day. We don't have a trade yet. They open up the market up high. Catch traders shorting this again. They go sideways. There it is. 1, 2, 3. Pin hammer reversal. This is where they pin. Even though the trade was right, they put heat on you for 15 minutes. A 30 pip candle on a 40 pip candle. Okay, that's 30 pips against traders who got in at the numbers before they shifted it away. But you have to feel confident and know exactly where you've gotten in, and that even though they may be sitting there and putting heat on you, that they're done. They're done doing their work down here. They've hit all the stops. They're going to reverse this market. This is where I would put my stop in place and my target, and I would walk away for 1 hour. Come back in an hour. If it's moved away, it's either moved away or stop me out. If it's moved away and done what it's supposed to do, I'll either look closer at how strong the move is gone. Our first target would be the shorts in London. Okay, so you might have held on for more than 50 pips. They've cleared the high from the swing high in the pre-market. But again, sitting through this, that's a half an hour of stress. Why not just put your stop in? If you're too stressed, you probably got too much size or you're not using a stop or something. So put a stop in, put your target in, or put in an alert in for when it hits the numbers. We know there's stops up there. That's probably the first place they're going if it's cleared the swing high. Put an alert to ring once it hits the swing high. Watch how it's behaving. It blew right through that. It gets up to the numbers and gives another pin hammer. And again, keep thinking 1, 2, 3. A 1, 2, 3 is a stop hunt. So hopefully you got some value out of that, traders. And again, you can see if you didn't take any money off the table because people think it's going to keep going. They come back in the next morning in Asia. They hit the stops at the BOE and they go right back down to get the guy who didn't take any money off the table. Take profits. Keep it simple, traders. 12 candles. The first hour is usually a trap. Stay disciplined. Stay focused. Study these 12 candle windows. We want to work from the high and the low of the day. Have a great weekend.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.